Okay, so trading feels very difficult right now, and I thought I would talk about why that is. Because a lot of the past leaders right now are pulling back. For example, NVDA has been on a bit of a pullback for some time now, with a peak from back in October. If we go ahead and look at Microsoft, we can see that it's faring actually a little bit worse, with a top from all the way back in July, where it tried to make a comeback back to those highs but failed and has been on a downtrend ever since. Meta, who recently had their earnings gapped up on the news and now is kind of just trekking sideways. We'll see what happens here. But Meta has been in a really long downtrend for some time as well, from back in August. And most of the same can be said for Tesla as well, which has been in a bit of a range itself as well, with a peak not that long ago back in December. But one thing is pretty clear, all the Mag 7 stocks are pulling back, but it's not only the Mag 7 stocks, all of the mid-cap stuff or the mid-tier stuff that were really putting up great performances last year are pulling back as well, even stuff in the quantum names. So how about we look at QBTS? D-Wave Quantum with a top back in October. There's also IONQ. Looking quite similar. Of course, they are in the same sector, quantum computing. But as you can see, the major players of last year are pulling back quite heavily. And if we look at the Qs, we have certainly been in a range for some time, which means that if you've been trying to take new money longs, it's likely that you've been running into some trouble. And I want you to look at something on the Qs here at the top resistance level. Look at the peak. Look at when that peak happened back in October. A lot of the stocks which has made their peaks were back in October and they ended up making new lows. Funny enough, the Qs are mostly in a sideways chop, with a lot of the major tech stocks actually making lower lows. So here's that first top back in October, and we have another top right here in December. And we also have a second bump here in December that doesn't go quite as high. And let's see, what do we have here? This is in January, where we have this stop respecting the previous two highs. And we finally get a breakout out of this triple resistance level here, and we just end up hitting a top resistance here right again, back at the October resistance, and we come back into that range. Now, this is very important. About 50% of a stock's move is completely dependent on market conditions. This means that when the entire market as a whole is entering a range of consolidation where it's unable to make higher highs or unable to make lower lows as well, that's going to create a lot of chop. And that's going to mean that if new money longs enter the market, they may find that their buys end up failing. Even with good risk management, you can end up with death by 1,000 cuts. So the question is, when will the chop end, and when will we be in a position where our buys break out with significant momentum for the broader market at least? And that's going to be completely dependent on when the market, the general market, is able to exit its ranges. And of course, we can end up coming down and breaking through this support level and breaking lower. And at that point, we're going to enter a bearish period. And we absolutely do not want to be entering new money longs. It's really a matter of either going short or just taking a vacation. And guess what? The market goes up 80 to 90% of the time. So taking a short vacation while the market does a beautiful pullback is simply just a moment to relax. Now, the opposite can happen and we can break to the top. And that would be exciting news as well, because that means the general market is looking a lot healthier, and that increases the chances of new money buys working. Now, it's simply a matter of where the market wants to go. We have already had such an amazing run, such an extremely long run. So if we do pull back from here, it's really, really, really justified, especially after this long move. The market does move in upswings and downswings, so it would be completely okay. It's simply, as a trader, it's simply about recognizing that, stepping out of the way, or simply going short and waiting for when the market provides us with an opportunity like we see here, where we're simply trending, making higher highs and higher lows. We're above the moving averages, and that will greatly increase the chances of new money longs working. Ignoring this concept has killed many trading accounts, because in a bad market, most trades fail. And in a sideways chop markets, some trades can work, but a lot of them do fail as well. But some of them have been working quite well, actually, but they are quite specific, and you really need to understand what's hot. And as you know, on this channel, as I always say, we only talk about hot stocks from hot sectors. And recently, even some of those have been pulling back. So we've had a pullback in SNDK recently on earnings. How about MU? Little, but I mean, it's such a minute pullback in the grand scale of things. Look at this incredible trend that we have gotten from MU, and we're still trading quite high and above the moving averages. So really not much of a pullback here, but we do have a big red elephant candle, which is a potential sign of the beginning of a pullback. And if we look at the volume, we can see that it did pick up just a little bit here on this last day, on Friday, the 30th of January. But of course, we need to talk about silver and gold and what has happened on Friday with an incredible gap down and follow through with a massive increase in volume, completely just breaking through all the moving averages. If you had purchased this while it was extended, you have definitely woken up to a nice surprise on this Friday here. But we must admit this was an incredible move, and we did see the signs of increased volume near the top, showing signs of capitulation and exhaustion, paired with the tiredness in the market. And gold looks about the same, an increase in volume at the highs, way above the moving averages, just clear, clean capitulation action. So if we're looking for longs, what is it do we need to do now? Well, it's all about being patient and analyzing what's going to be breaking out and pulling back next. Pullbacks are gifts from the market gods, because that allows us to get in at favorable entries. And those will be in hot stocks from hot sectors. And it may not be the hot sectors from 2025 or even last month. These can be new emerging sectors, or sectors that maybe were hot, or sectors that have been dormant and are now picking back up. In my next video, I'm going to be talking about what sectors we'll be watching very closely, and space is definitely one of those major sectors, and RKLB is in one of those hot sectors. Right now, it's coming out of all-time high level and pulling back into support, coming out of all-time highs. And space being one of the new hot sectors, I really wanted to dive in and take a look at some of the beautiful stocks within that sector that are setting up and the public isn't aware of just as yet. So stay tuned for that, hit the like button and subscribe. Peace.